Hello and welcome to the trade setup. In this video we are looking at junior gold miners ETF. It is time for another update, and on this chart we are still facing the downward pressure from the all-time trend to the downside that has been forming, and we managed to push into the last level of resistance at the 78.6% retracement, but there was no sustained break, at least not yet. So at this point there is still quite a high risk that this could still turn into a larger ABC structure that could take us even to new lows. Yeah, if we break above the 78.6% retracement and we sustain above that level, the probabilities would rather shift more in favor or of a more bullish interpretation that we would manage to track with more reliability an active uptrend. However, even in this case, on this chart, I do still see quite a lot of potential, especially as long as we don't break our support levels for the direct continuation to the upside within an impulse. Now, so far, on this chart, we have been tracking this as a series of 1-2 setups in this area, and then we have a very strong internal wave 3 developing here. And within this wave 3, we haven't even been covering too much. The pattern that has been developing in this area, honestly, could be just a 1-2, 1-2, doesn't matter exactly. The main idea is that we are tracking this as an internal third wave to the upside, where we are expecting to form our first larger actual wave 3, and then we would end up looking afterwards for follow-up for 5 patterns to complete this much larger wave 3 instead. Now, in the previous video, I did provide you this area of support for direct continuation to the upside, and we had a pretty much very full count within this wave 3, but it appears that we pushed directly higher, which is not actually ideal. I would have liked a more clear wave 4 in this area, but honestly, I have two options at this point, because I could consider that this third wave has just extended, but I do also have to point out that this larger third wave may be already done here, in which case we would need to watch out for a slightly different area of support instead. And in such a scenario, I do have to consider that, yeah, we may be following what could be here in yellow, where we should be looking for already the larger area of support for a fifth wave correction. And if we still manage to consider that this is the actual third wave complete and push directly higher within a wave 4, I would need to shift up this area of support for the white interpretation internally, where I would be looking for support between the $101 level all the way down to the $89.5 level, which seems to be the case that we already maxed it out. And yeah, if we really are following through within this white interpretation, we should already be on our way in the fifth wave to the upside, unless this develops as a triangle that would still be allowed to track sideways. But a break below the 50% retracement would be a pretty big deal, because then we do still have this backup scenario in yellow. But if we don't manage to hold at least this one between the $98.4 level all the way down to the $84.8 level, and we break below the 50% retracement here, that would actually have quite bearish implications, because it would pretty much invalidate the idea of an impulse developing in this area, and I would really need to shift to a much more bearish interpretation, either allowing a full breakdown here, something like an ABC. It would be quite a high risk if we break below the $84.8 level, but also there is a possibility of me considering here a diagonal structure that would still allow further continuation to the upside, but the retracement levels that we would need to watch out for in that case would be heavily downgraded, where this would be a 1-2, this would be a third, and this would be an ABC pattern. So in that case, I would consider a 1-2-3 complete, and I would be looking for a fourth wave correction here, where in that case I would be watching out instead for support. And let me actually check that I get the right top here. It is a bit crowded, but in that case I would be watching out for support really to only start at the $82.7 level instead, and I would need to allow it to go all the way down to the $50 level at the 61.8% retracement. Now, this would have quite bearish implications, firstly, because we wouldn't be able to track an impulse to the upside anymore, which is actually quite bad for the reliability that we can track on the chart. And additionally, because the likelihood of a diagonal structure support zone to work out is much more reduced compared to what we would be tracking within an impulse. We would have extended support zones, it would be more difficult to get a good entry, and even when you get an entry, having the risk-reward ratio not be as good, because you may get an entry at the 38.2% retracement, but it could go all the way down to the 61.8% retracement, and then could still break down afterwards or could recover from that place. It wouldn't be as great as when we were looking, or when we would be looking for something like, I don't know, let's say a fourth wave, where the 50% retracement would be the last level of support that we would be really considering, as is much easier here within these structures where we are really tracking an impulse. And for now, I am still hoping and looking for direct continuation to the upside here within the white scenario, where we may still form another high, complete the larger wave tree, and then continue in a very could be a very extended series of 4 or 5 patterns that would allow us to trend higher and higher within this larger wave tree to the upside. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.